Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. Happy Tesla Monday! Tesla just released the Q2 2021 earnings results, and they were amazing. Seriously massive. Best quarter ever by far. Don't forget to like and subscribe. Let me switch the screens. On the slide deck, it said that they expect 50% CAGR. So I'm going to give you a little gold nugget that Elon said in the earnings call that expands upon this. And he actually got a little bit more definition for us. Here's the golden nugget. Elon said first that they are battery cell constrained, and their suppliers can supply twice the cell output next year over this year. Twice. Guess what? That is a hint on their production forecast. That is a huge hint. Twice. Oh my God. Also, he said that next year they expect over 50% net growth next year, maybe 100% growth. So 50 to 100% growth next year in 2022 over 2021. And 2021 is already going to be almost 100% growth over 2020. I mean, Tesla is growing at an exponential rate. Nobody can compete. I mean, oh my goodness gracious. It's just it's fantastic. It really is. Okay, so let's move on. On to Tesla's actual stock today. They are up 2.21% regular hours, up 1.93% in the after hours, so investors liked it. Honestly, I think in the after hours, it should be up so much more than 2%. I mean, they beat expectations by 50%. I mean, and a 2% gain, it should be up 10%. What is this? But anyway, $633 billion market cap. So the expectations going into this quarter were for $11.3 billion in revenue and 98 cents per share in earnings, EPS. Keep these numbers in mind. Let's go on to the actual results. So here's the slide deck, Q2 2021 updates going down. All right, so yeah, operating cash flow less CapEx of $619 million. This is the free cash flow, $619 million. Net debt and finance lease repayments of $1.6 billion. Tesla just repaid $1.6 billion in debt and still had free cash flow. They are a money printing machine. In total, $912 million decrease in our cash and cash equivalents to $16.2 billion. They have $16.2 billion in cash on hand. Oh my lord. $1.3 billion GAAP operating income. 11% operating margin in Q2. 11%. And guess what? I looked it up. GM and Toyota, their operating margin is about 12%. Tesla just leapt to 11%, and they're about to leap past all of their rivals in operating margin. That's basically their efficiency. I mean, they're about to become the most efficient auto producer ever in history. Ever. I mean, these are massive numbers. $1.1 billion GAAP net income, $1.6 billion non-GAAP net income, excluding share-based compensation in Q2. 28.4% GAAP automotive gross margin, 25.8% excluding credits in Q2. Record vehicle production deliveries in Q2, we discussed that in the last video. Successful launch of FSD subscription in July. And started delivering the new Model S to customers, which we've also already discussed. This last paragraph. Public sentiment and support for electric vehicles seems to be at a never-before-seen inflection point. We continue to work hard to drive down costs and increase our rate of production to make electric vehicles accessible to as many people as possible. An inflection point. And this is true. I agree with them. ICE is dead. It's the end of the ICE age. And it's on to the EV age. And Tesla is leading the pack by far. Okay. With global vehicle demand at record levels, component supply will have a strong influence on the rate of our delivery growth for the rest of this year. That's a negative sign. I'm hoping there's nothing they can do. The shortages are the shortages. Let's move on to the numbers. Okay, this is where it gets really, really exciting. Okay, number one, automotive revenues, $10.2 billion. Regulatory credits actually decreased to $354 million. That's a decrease of 17% year over year, and an even bigger decrease quarter over quarter. I mean, so they're getting less in the regulatory credits, but their income, EPS, and everything else is far exceeding their decline in regulatory credits. They're becoming an efficiency monster now as well. You can see the gross profit, $2.9 billion, automotive gross margin rather, we discussed already. Total revenues, $11.9 billion. So you can see right here the gross profit. So the operating expenses was, now this is where it gets really interesting. Look at this. I thought this was intriguing. Tesla's operating expenses decreased quarter on quarter. Operating expenses in Q1 was $1.6 billion. Last quarter, it decreased $50 million to $1.572 billion. So operating expenses decreased, but total revenues increased from $10.4 billion to $11.9 billion. Usually they kind of go in the same direction. It's rare that we see one increase and the other decrease, especially revenues. It's rare to see revenues increase and operating expenses decrease. I mean, that just shoots your margins through the roof. And you can see that right here. Operating margin in quarter one, 5.7%. Quarter two, 11%. Oh my God, that's a huge gain. That's a doubling. That's a doubling. A doubling. It's a 555 basis points year over year increase in operating margin. You don't see this. You don't see this anywhere. Not this quickly, at least. You may see it over time, but quarter over quarter, this is unheard of margin expansion. This is insane. So you got GAAP net income, $1.1 billion, non-GAAP net income, $1.6 billion, which is a 258% gain year over year. And that's also an increase from $1 billion last quarter. So last quarter, $1 billion, this quarter, $1.6 billion. That is a 50% net income non-GAAP gain. 50%. Oh boy. So EPS non-GAAP, $1.45. Remember the number I told you to remember? That number was 98 cents was the expectation. The expectation was 98 cents. Tesla delivered $1.45. That is a 50% beat. You don't see that. You don't see that. That's a gain of 230% year over year. 230%. 44 cents to $1.45. Quarter over quarter, 93 cents to $1.45. Oh my goodness. How do they do this? Like, you have to read the document to figure out just what's going on here, because this includes wrapping up, doubling their production, 2 new factories that aren't even online yet. Those are in production, eliminating capital expenditures, just creating costs through the roof, and yet their net income just shoots to the sky. It's just amazing. Adjusted EBITDA to $2.5 billion. Sorry, an increase of 106%. Oh my goodness. Okay, so cash flow expenditures, you can see that right here. This is the this is spending on the new factories. So capex was $1.5 billion. That will decrease when Berlin and Austin are nearing completion or are complete. That will start to go down a little bit, but it'll ramp up again when more gigafactories come online down the road. So it's just one of those things. Free cash flow, $619 million. Again, that's mostly impacted negatively by the capital expenditures and also the debt repayment. It was a huge debt repayment, which is actually it's something we'll go into in just a second. Profitability, this profit level was reached while incurring SP share-based compensation expense attributable to the 2018 CEO award of $176 million in Q2. So Elon Musk got a $176 million payout from Tesla. It's well deserved, honestly. It's the reward from the package that he got. It's driven by results. And guess what? Tesla is delivering results. And because Tesla is delivering results, Elon Musk deserves to be paid for it. It's that simple. You get paid for the results that you deliver. It's driven by a new operational milestone becoming probable. So they're paying ahead for something that's gonna happen. Oh, what else do we got? So there's a Bitcoin-related impairment. I'm actually surprised I didn't yellow this. I missed it. A Bitcoin-related impairment of $23 million in other items. That is a far lower impairment than I expected. I was expecting over $100 million. So that's good. Cash, yeah, we discussed that. Okay, so there's a net debt and finance lease repayments of $1.6 billion. And as I'll go into in a second, the reason they repaid that now instead of later is because this $1.6 billion was high interest rate debt that Tesla put on earlier when their survivability was in question. They were in trouble. Tesla was in trouble for many years. And due to them being in trouble, they took on all this monstrous amounts of expensive debt, including this, at very high interest rates. So when most companies become profitable, one of their main targets is fix the balance sheet and get rid of this super expensive debt that they simply don't need anymore. They had more cash than debt. So it's a good use of cash to just get rid of this debt. Partially offset by free cash flow is $19 million. Moving on. Okay, so another key point, another awesome point was the storage deployed. $1.2 billion, up 204% year over year of storage deployments. That is a huge increase year over year, even quarter over quarter. That is a tripling. They tripled the storage deployed megawatt hours. The other thing, Supercharger Stations increased 46% year over year. Supercharger connections increased 49% year over year. This is key for future growth. And it's nearly 26,900 Supercharger connections now, up from 24,500 the quarter prior. Now, as far as capacity is concerned, you can see on the right that the current installed capacity is over 1 million vehicles. So had Tesla not delayed the Plaid's release so late in the year, I honestly think they would have been close to or may have exceeded 1 million units this year. But due to the Plaid's delayed release as well as shortages, that's unlikely, like a very low probability. They're more likely to deliver 900 to 950,000 cars this year. So, Shanghai, China. While we experienced minor interruptions due to the supply chain challenges and factory upgrades, production in Shanghai remained strong. So that's good. Oh, and very important, Berlin. How's that coming along? While our global production lines continue to run as fast as possible, European demand remains well above supply. This just eliminates any and all short thesis of Tesla having difficulties in Europe. This is it right here. Tesla's shorts just caught fire, resulting in growing wait times for delivery. We continue installing equipment, have begun testing tools, and are working as quickly as possible towards starting production in Berlin while growing import volumes in the interim. That import volume is coming from Shanghai. So Berlin's going to come online as fast as possible, barring regulatory hurdles. And that's really the only reason it's not coming online earlier is due to Germany's regulations. It's Germany. Again, as I mentioned, what are you doing? I mean, Tesla's working to save the world from carbon emissions. They're working to eliminate these greenhouse gases. Just what? Why are they blocking this? It makes no sense at all. Oh, and look at this on the right. So here's the FSD 9.0 images right here. It's looking nice. You can see a lot more detail than you did in the previous beta release. Battery and powertrain. We have success. This is a good one. We have successfully validated performance and lifetime of our 4680 cells produced at our Cato facility in California. They have just confirmed that the 4680s work as expected. We are nearing the end of manufacturing validation at Cato. Field quality and yield are at viable levels, and our focus is now on improving the 10% of manufacturing processes that currently bottleneck production outputs. While substantial progress has been made, we still have work ahead of us before we can achieve volume production. Internal crash testing of our structural pack architecture with a single piece front casting has been successful. That just means the 4680s are coming. As is mentioned in the call, it is a question of when, not if. Energy storage. Energy storage deployments more than tripled year over year in Q2. And as you can see on the right here, I like to look at the trailing 12-month chart because it's a more, it's growth over time, really. It's more lumpy than the quarterly chart. So you can see it's just basically just an exponential curve upwards. Fantastic numbers. Profit. We expect our operating margin will continue to grow over time, continuing to reach industry-leading levels, with capacity expansion and localization plans underway. And yes, they're almost there. They're just 1%. Just 1% operating margin improvement, and they will have matched GM, Toyota, and the others as the most cost-efficient automaker, and they will soon surpass them due to their just that trajectory. 5.7% to what was 11% quarter over quarter. Who does that? Who does that? So we got some photos. Here's the Gigafactory Berlin. You can see this is the Model Y factory construction. Looking beautiful. You can see it's nearly complete. It's nearly complete. It's got to get past the regulations. So here's the paint shop. Looking nice. Gigafactory Texas Model Y factory construction. Here's how it looked 6 months ago. Here's how it looks today. Again, this is also looking really nice. That's fast production. That is fast. Here's the stamping press at Gigafactory Texas. Looking nice. Model Y body shop in Texas. Looking good. And Model Y factory construction. Oh, I guess it's safe enough for them to stand on the roof. That's a funny picture. Shanghai continues expanding. That's good. Now for the key metrics, again, I look at, here it is, the trailing 12-month numbers. So it gives you better insights. So you can see vehicle deliveries, just what else is there to say? Operating cash flow, you can see it was sort of hovering steady for a while and it just took off like a rocket. These are their earnings, essentially. Operating cash flow, well, operating cash flows, and then free cash flow, and then takes off like a rocket. Net income and adjusted EBITDA, just really good. It's growing exponentially. Let's see, financial statements. Okay, so we're digging a little bit more deeper into the details on what exactly happened. How were they able to decrease their operating expenses? Research and development actually decreased from $666 million to $576 million quarter over quarter, which is still a huge increase year over year. SG&A decreased quarter over quarter. Let's see, there was an increase in restructuring. And in total operating expenses thus decreased from, as mentioned earlier. I don't need to say much more there. Now again, they're repaying debt, so their interest, relatively, Tesla has very little debt. So you can see their interest expense last quarter was only $75 million. I mean, compared to the other auto manufacturers, these are baby numbers. Tesla has a huge, nice balance sheet. So digital assets, this is their Bitcoin. So Tesla has $1.311 billion in Bitcoin on hand. Nice. debt of finance leases. So here's their debt. So as you can see, it decreased year over year from $10.4 billion to $7.8 billion, and quarter over quarter from $9 billion to $7.8 billion. And they are paying off their debt fast. What else is there? Just general stuff. Okay, moving on. The other thing I wanted to look at was actual debt for comparing comparable other worse auto manufacturers. Let's look at Ford. Ford's net debt, this is debt minus cash, is $131 billion at Ford. Honestly, I think Ford's going bankrupt soon. How can they afford to repay the interest on this? Okay, continuing. Toyota, net debt, it's actually a whole bunch of yen. I don't even know how big that number is, but let's convert yen to dollars. 183 billion US dollars in debt. What are they doing? Why do they even take on all this debt? Why be so inefficient with your capital and your money and your spending? It's insane. I mean, why? Why? And Tesla? What's their net debt? Take a guess. I'll give you 3 seconds. Tesla's net debt? 0. That's it. 0. Tesla has more cash than they have in debt. Far more. $5 billion. They have $5 billion more cash than debt. That's improved this quarter. And this is the previous quarter. This is on March 31st. So they're even more zero debt now. Okay, so let's go on to the earnings call. So on the screen, I'll just show you their stock price, just to say something nice to look at. Because, what else are you going to look at? Okay, so I took some notes. Elon said they surpassed $1 billion in GAAP net income for the first time in Tesla history. It is a milestone achievement. Absolutely huge. Public perception of EVs is at an inflection point, as was noted. The chip shortage is still quite serious, and they are unsure how long it will last, but they think it will get better later this year. It's outside of their control. It's just, what are you going to do? But Elon says it seems like it's getting better. Now here's where Tesla does what the others don't. Nobody else does it. Well, no other auto manufacturer does it. This is what makes Tesla a tech company instead of an auto company. What Tesla did is they are substituting alternative chips and rewriting the firmware on those chips in order to alleviate the chip shortage. No other automaker does this. No other automaker can do this. Only Tesla. Yeah, that is huge, and one of the reasons how they're able to nearly double production year over year, whereas the others are just decline, cut, stop production, because they have no way of doing this. FSD subscription launched last month. It's starting a slow build, then it will gather a lot of momentum over time. It needs the FSD build to roll out to get it to a higher rate of people accepting the subscription. And there's lots of progress on FSD. Obviously, as we all know, FSD beta is just out to a limited number of people. So it needs to get to the point where they can unleash it to everybody, unleash it to the world. Then everybody will go, okay, you know what, this is amazing. Let's get FSD. FSD subscriptions, Tesla thinks, will be a significant factor next year. And their earnings call was from Giga Texas. There are a couple glitches during the call. It could be due to the factory under construction. Who knows? Gigafactory Texas is making incredible progress, and Texas is mostly complete. Berlin, they're also mentioning, has good work done. Producing new model of the Y in both they're planning to actually produce the Model Y in both factories later this year. So that's a good sign. That means they're, at least publicly right now, not delaying Berlin to next year. because it's looking like Berlin may get delayed to next year, but Tesla's sticking to their guns and saying this year. And that's a good sign. He mentions 10,000 unique parts and processes. There's been hundreds of car startups. Only Tesla and Ford are the only two to go to massive production without going bankrupt. Things we already know. Let's see here. Now, he mentions that the Model Y will have substantial improvements in manufacturing when they do it in Austin compared to what they're currently doing in Fremont and also in Shanghai. It's going to have a rear and a front gigacasting and the structural battery pack. So this is going to reduce the cost and improve the performance of the Model Y substantially. This is a huge test for them. And Elon also said that they have a backup plan if the 4680 hits a snag. There's lots of new technology in the 4680, lots of progress, tremendous amounts of innovation, as you can see from Battery Day. FSD is he mentioned FSD's progress. And Elon's words are FSD is progressing 2 steps forward, 1 step back. And I agree with him on that. It does seem like a lot of things improve with each release, but a couple things kind of degress. But they need to keep marching forward until it gets substantially better than a human driver. Moving on to CFO Zachary Kirkhorn. He says that product delivery lines have doubled in 2 years. Auto gross margin increased 10 percentage points. Costs are reducing faster than the price. And this is the key. The lower you get the price, the higher your sales go up. And they're reducing costs faster than they can lower the price, which increases their margins. So the margins are improving while they're lowering the price and shooting up, skyrocketing their sales. High price debt was taken on when the company's survivability was in question, as I mentioned, and it's being paid back. I expect that to continue for whatever expensive debt they still have online. Moving on to the question and answers. Cybertruck. Cybertruck is currently in the alpha stages. It carries the structural pack and large casting design as is in the new Model Y, but they're going to release the Cybertruck after the Model Y. The Model Y is kind of their test bed for their new designs before they move on to the Cybertruck. Elon says, people question, why not create your own chip fab? Why not create your own chip fab? Elon just commented, comically, that if they were to create their own, it would take them 12 to 18 months. And yeah, he's right. Scaling the Cybertruck and Semi will be very hard, largely due to their absolute size of the vehicles. So that's something to keep in mind going forward and something I hope they expand on when they get closer to production. The Cybertruck and Semi are both huge users of cell capacity, because this is the other thing. They both have a tremendous amount of cells to be put into those vehicles. And there is a cell shortage right now, especially the 4680s. I mean, there's only one line producing them right now, and they're just in testing phases. So as the 4680s ramp up, the Cybertruck and the Semi will also ramp up at the same time, and the same thing with the new Model Y coming out of Texas. So battery cell capacity is actually, I think, the biggest issue that Tesla has right now. They need as many batteries as possible. However, that said, Tesla says that the 4680 battery cell availability will increase huge next year. It will ramp gradually. So it's going to start small, and then just explode towards the end of the year. If there is a cell production disruption, what Tesla will do, this is actually a key learning point for all of us, is Tesla will throttle down not their cars, but their Powerwall and Megapack production. Cars are the priority. And you can actually see that. They say that their Megapack has a 1-year backlog right now, due primarily to these cell constraints. Now, Superchargers being used by competitors. They actually described how this will work. Fantastic. That's why I love waiting for these calls before giving you guys these videos. So what they said is that you will download the Tesla app, drive to a supercharger, and in the application, indicate the stall, and then input that into the app, and then that app will turn the stall on, and then from there you can just use it like normal, and then you'll be based you'll be charged pricing based on the time of the day. So during busy hours, the price will go up. And it should work with any manufacturer's car. And that's key. Now, the thing is, this is going to make Tesla a boatload of money. Why? Because they have so many superchargers. They have more than everybody else combined. It's Tesla's world in the supercharger network. Tesla is going to be the world's largest, and I quote, gas station, using old world terms. Just thinking the old world into the new world. So I think Tesla is going to become the largest electricity producer for all EVs, not just Tesla EVs, but all EVs. Buy a GM car, you can charge it at a Tesla supercharger. Buy anybody else's, you can charge it at a Tesla supercharger, most likely. And this will generate a ton of income for Tesla. And they also said that as they expand and more users jump onto the superchargers, that will reduce the cost per user. See here. So chargers must grow larger than the vehicle output. Now the 4680 is already reliable enough for vehicles in limited production. 1 million test miles they are doing on the 4680 per month, and it has been successful. That is awesome. Equipment's arriving for high volume cell production right now in Berlin and Austin. So they're aiming for 100 gigawatt hours per year at an annualized rate at the end of next year. Elon, this is where it gets kind of, okay, sorry. Elon stated that he will no longer be doing earnings calls unless something important happens. I mean, Elon always delivers so much gold on these calls. You can see right now, just through the items that I listed, this is basically all Elon talking. We got all this information from Elon. Not from Zachary, not from anybody else, from Elon. And he just wants to do a yearly online call instead of these quarterly earnings results. And I'm just, oh, please, no. I mean, I understand Elon's point of view. He thinks that his time is spent better working as opposed to talking. But his earnings calls are such a good sales tactic. All these gold nuggets that he gives us, all this treasure that he gives us is so valuable, not just to us, but to Tesla. So I hope he sort of rethinks this, hopefully. But honestly, I think Elon seems tired. I think it's the bigger issue, is this whole stress of wrapping up two gigafactories at the same time, including all these cars. You got the new Model Y, you got the Semi, you got the Cybertruck, you got everything else. You got the so-called Model 2, the 25K vehicle. You got everything, all of the things that we don't even know about. You got the Plaid that just released. All of these things happening at the same time. I mean, Elon is under a lot of stress and a lot of pressure right now. So maybe he just needs some time off to sort of regroup and recharge his batteries, and maybe he'll get back to it. That's just a guess on my part, but we'll see. But yeah, so thank you, Elon, for all that you've done for us on these calls. Thank you for all these gold nuggets that you've given us. Rest up, and thank you. Okay, so continuing with this video. So yes, they're working with other. They're working with other suppliers to produce 4680s for Tesla. So this is huge. So they're saying the other suppliers have come to Tesla and they said, hey, we're kind of concerned. You're producing your own batteries. Are you going to cancel our contract? Tesla says, no, give us everything. Give us more. Give us everything you can make. Everything you can make, give it to us, because they need it to expand. So as I mentioned, Tesla's battery suppliers are going to be doubling the production next year. And this will include some 4680 cells. I don't know the exact amount. They didn't say. So yes, give us as many packs as possible. Oh, another golden nugget from Elon. Another golden nugget from Elon. Okay, there is a chance of 1 million units of Powerwall installed next year, depending on cell capacity and semiconductors. The demand is over 1 million Powerwalls per year. So energy is growing significantly. It will grow significantly next year. I think I'm sort of waffling it a little bit. I think they want the 4680s to fill these power walls and these mega packs, so that way they could build these more efficiently and sell them at a cheaper price to consumers and make even more money. So they also stated that they need 1,000 gigawatt hours to do 2,000 gigawatt hours per year of battery production. This is more of a long-term thing, and they're still working out FSD pricing. It's sort of a trial and error at this point. They don't know the right price to charge, so they are working on that. So don't forget to click the like button and subscribe. Thank you to the channel members. Thank you to the patrons. You guys are amazing. You keep this channel going. You are all fantastic people. Thank you for watching this video, and I will see you in the next one.